All right, today we're diving into a really incredible story. It's about a bank that started out serving the unbanked and somehow turned into a billion-dollar giant. So let's break down how they did it. Okay, it all kicks off with this number right here, $1.02 billion. I mean, a figure like that, it just makes you stop what you're doing, especially if you follow the world of finance. It's a big one. And let's be super clear here. We're not talking about their profit over like a decade or something. No, that was their headline earnings in just one single year. It's just a staggering amount of money. So naturally, this leads to the huge question, right? How on earth did a bank that was originally for people without bank accounts become this absolute financial powerhouse? You see, hitting that billion-dollar profit mark, that wasn't just about the number. It was a massive, massive turning point for the bank, especially when you look back at their 25-year history. I mean, this achievement really cements their spot as the top dog in South African retail banking. They've basically overtaken these old legacy rivals that have been around for, generations. And just look at the momentum here. A 23% jump in headline earnings year over year. Seriously, that kind of growth when you're already this big, it's almost unheard of. It's just incredible. Okay, so how did they pull this off? Well, you'd probably guess it's all from their old school lending business, right? But here's the twist. There's been a huge shift in how they make their money. Just take a look at this chart. A whopping 67% of their income, 67%, now comes from things other than lending. This isn't just a lending business anymore. Far from it. They've really diversified their game. So let's drill down into where this new money is actually coming from. Their value-added services and their mobile business, boom, up 38%. Their insurance income, same story, up 38%. These aren't just little side hustles, They're now core, central pillars of the entire business. And this whole diversification play, it's only possible because of Capitec's secret weapon, its biggest advantage, just sheer massive scale. And that superpower, it's built on a single number, 26 million. That's 26 million active clients. It's just an enormous customer base. And just to give you some perspective on that, 26 million people is more than the retail customer bases of several of South Africa's oldest, most established banks combined. Think about that. It gives them this incredible, unmatched network to sell any new product they can dream up. But of course, this kind of explosive growth, it doesn't come without risks. As you get bigger and bigger, you start to face some serious challenges, especially when it comes to managing the quality of your loans. And you can really see that tension right here. The credit loss ratio, which is basically a key number for tracking risk, it's ticked up from 7.5% to 8.1%. Now, that might not sound like a huge jump, but trust me, it's a number that management is watching like a hawk. So, the big question is, how are they dealing with this rising risk? Well, the answer is pretty simple: technology. Specifically, they're leaning hard into data and artificial intelligence. And you know what? That investment is paying off big time. In just the past year, their AI systems designed to catch fraud, they prevented 673 million rand in potential losses. So this isn't just about playing defense, it's actively creating a ton of value. Now, it's important to remember that Capitec's success isn't happening in a bubble. It's actually a pretty powerful signal about the overall health of South Africa's entire financial sector. You see, these amazing results from the bank came at a really interesting time. International confidence in the country was growing. South Africa was taken off this gray list, which is basically a watch list for countries that need to tighten up their anti-money laundering rules. Add to that a credit rating upgrade and a cut in interest rates, and suddenly you have a much, much friendlier economic climate. And this really shows you how Capitec stacks up on the world stage. Their return on equity, or ROE, hit 31%. Now, to put that in perspective, the average for similar banks globally is somewhere between 12 and 15%. So yeah, they're not just doing well, they're operating at a truly world-class level of efficiency. And maybe this is the most important thing to take away from all this. Straight from management, they're saying, hey, we are not a growth story that has peaked, we are still building. They don't see themselves as a company that's finished growing, not at all. They think they're still in the middle of a high-growth building phase. So when we look at Capitec's whole journey, what does it all mean? It kind of leaves us with this one big critical question.
As technology and sheer scale become the ultimate weapons in business, what does that mean for the future of banking? Is it all just a race to see who can build the biggest, most dominant financial platform? It's definitely something to think about.